Good afternoon and welcome to the November Crop Production and WASDE briefings. My name is Joe Parsons. I serve as chair of the Agricultural Statistics Board at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're pleased to have Dr. Seth Meyer, USDA's chief economist, join us as Secretary Designate today, and also Dr. Cindy Nickerson, Deputy Chief Economist. Dr. Meyer and Dr. Nickerson, I would like to share that we have representatives from USDA's Office of Ethics with us today, and also the National Sustainable Agricultural Coalition. So welcome to, it's great to have guests here in the room with us. And obviously it's great to have guests with us on our live stream today. So welcome everyone. I want to express my appreciation, or our appreciation, to Eric Gerlach of our South Dakota State Statistician, and Stephen Dothage of our Great Lakes office right over here. Thanks to both of them for their valuable assistance on producing this report. Also, we have Jennifer Van Coort in from our California field office working on rice with us as well. I have a few notes for our live streaming audience. The crop production WASDE reports are considered principal federal economic indicator reports. The Office of Management Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of the reports within 1 hour of their release. We will not be taking questions during the briefing from the public. However, NASS and World Board are available for email or phone questions, and NASS will host a social media event 1 hour after the release of these data. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy between what is presented at this briefing and the published estimates, always refer to the official published estimates. With that, I'm going to turn it over to the esteemed Mr. Lance Honig, Chief of the NASS Crafts Branch. Lance will be immediately followed by Dr. Mark Jekanowski, Chair of the World Ag Outlook Board. Lance?
All right, thank you, Joe. Glad you finally got that.
I've been working on that.
All right. Good afternoon and welcome to everybody out on the live stream as well. This is for you, Mike. I've got a lot of information to go through today. So I'll move fairly quickly, but obviously we'll have plenty of time at the end for questions. If you've got anything, be happy to address those things now. So before we get into the numbers, I'll start things off by sharing a little bit of information about where the information came from that fed into the forecast in the report here today. Several different sources of data. You can see first off our ag yield or operator reported survey. This month, our sample size, nearly 6,000 producers that we contacted between October 30th and November 6th. Again, as usual, asking them to report. You know, I always say they're expected yields, but the vast majority of them are actual reported yields at this point, as you'll see our harvest progress in some of the slides I have for you, moving right along this year. And so some great information feeding into the report there. Additionally, of course, we have our objective yield work for the corn, cotton, and soybeans. You see the total number of plots there, 3,930. The field work, you know, the official period, October 25th through November 1st. But when you get to this time of year, if harvest is imminent, those trained enumerators get into those plots and make those final harvest measurements before the combine comes through. And so we've been gathering that information all month long, quite frankly. The last piece I'll mention is the remotely sensed information, but as you can see through the with the imagery through September 29th, once we kind of hit that window, there's nothing new to gain there. So we're really looking at the same information from a remote sensing standpoint that we would have had a month ago. As the crop senesces, obviously, you're not going to gain any new insights into yield then. This first map that I have for you just highlights the sample sizes for the ag yield survey. And of course, the deeper the color, the larger the sample, as you would expect. You see the larger sample sizes in the key growing areas for the crops that I'll be talking about today. We'll start things off as usual with corn. Just to give you a quick update on that harvest progress. Here you can see the dark red line does represent the current season for our weekly harvest progress numbers. As of November the 5th, 81% of the crop was harvested. You can see a little bit ahead of average there. Last year we were a little bit faster than this, but certainly moving right along, as I mentioned. So with that in mind, of course, no change to the planted or harvested acreage as you would normally see in November. But as a reminder, acreage, of course, up fairly sharply this season. Yield, though, we're now forecasting 174.9 bushels per acre. That is up 1.1% or 1.9 bushels per acre from last month's forecast. So we're now up 0.9% year over year on that yield. That puts our new production forecast at 15.2 billion bushels, 1.1% above last month and 11.1% more than last season. And yes, that is a record high production for corn this season. Next, we'll take a quick look at the U.S. corn yield and how it compares over the last 30 seasons. You can see the trend line plotted in there as well. That 174.9 bushel forecast does represent the fourth highest yield on record, but still falls below trend. This next map will highlight the corn yield forecast by state. The way this map is laid out, the top number is the current corn yield forecast for that state. The lower number represents the percent change from last month's forecast. Any state that's colored in any shade of blue is increasing from last month. Any shade of red is decreasing. Normally I would tell you the deeper the shade, the larger the change, but there are no deep shades on this map. So you can see the changes from last month are all pretty minor. And again, overall, just a 1.1% change month over month. You do see a number of pound signs on the map, more pound signs than we saw last month. In fact, that indicates a record high yield, and we are forecasting record high yields in Alabama, Georgia, Indiana, New York, Ohio, South Carolina, and Tennessee. This next map is very similar, also shows the current corn yield forecast by state, but here the change is the percent change from last year's final yield. So we do see some larger changes here. Generally speaking, those are larger changes on a positive, right? As we look at last year, of course, we had some bigger problems last year in some parts of the country, and so you can see some pretty sharp increases there. But generally speaking, no major shifts here from what we've seen all season long. Again, just a quick reminder, this is some imagery from the remote sensing work that we do. But again, this is the same exact map I showed you last month, as we have no new information here. This next graphic, some information from our corn objective yield survey. What you see represented here is the percent of those samples that were processed in the lab this month. You can see for November of 23, 96% of those samples were processed in the lab, 95% of them mature, pretty much in line with what we would normally see in November. Some additional information from the corn objective yield survey here. Each vertical bar represents the number of ears per acre. The red dots represent the current yield forecast for that 10-state region for corn. You see the red dot increasing, representing that yield increase. No real change on the ears per acre. So obviously the implication there would be a slightly higher ear weight than what we had previously expected. Just a quick look here at the corn production over the last 10 seasons. As I already mentioned, record high production there. And then the next slide here, just comparing the current corn production forecast with the published expectations. The blue dots do represent those individual industry members' published expectations. The red block, the NASS forecast, a little bit higher than folks were expecting. In fact, if you kind of look at the dots, kind of looking at no change. But most of the reports we heard were things were better than expected the further they got into harvest. So as a result, you do see the increased forecast this month. Next, we'll move on to soybeans. Again, opening off with a little update on harvest progress. As of November the 5th, 91% of the soybeans were harvested, so nearly complete. They're a little bit ahead of average. Again, that was 86%, and just a couple of ticks behind last season. Like corn, no change in the planted and harvested area compared with last month. But unlike corn, acreage, of course, for soybeans down this season, but our yield now 49.9 bushels per acre. That's up just 0.6% or 0.3 of a bushel from last month's forecast. So overall, we are now up 0.6% or 0.3 of a bushel from last year. That puts production at 4.13 billion bushels. Again, up 0.6% month over month, but still down 3.3% year over year due to the reduced acreage this season. Here for soybeans, again, you can see how the yields compare over the last 30 seasons. fifth highest yield on record for soybeans, but like corn, still falling below trend this year. Next, we'll take a look at the soybean yields by state and first how they compare with last month's forecast. This map laid out just like the one I showed you for corn. A lot of gray, a lot of no changes from last month, but those that aren't changing from last month, but certainly more increases than decreases, right? But again, very minor changes month over month here. We do see some pound signs here as well. Arkansas, Indiana, Mississippi, Ohio, and Tennessee, all looking at record high soybean yields this season. And just for quick reference, this map shows you the soybean yields by state and how they compare with last year. Similar to what I showed you for corn, this map exactly the same as what I showed you last month with no new information from a remote sensing standpoint this month. Looking at some information from objective yield for soybeans here, you can see 91% of those samples were processed in the lab. Again, right in line with what we would expect this time of year. Looking at some other information from objective yield, here the blue bars represent the number of pods per 18 square feet. Again, the red dots do represent that yield. Not much change in the yield, but you see we did pick up a little increase on the number of pods this month. So just the opposite of what I talked about with corn. Implications there would be slightly lower pod weights than we had previously anticipated. Quick look at the production over the last 10 seasons here. You can see obviously down from the last couple of seasons, but still the seventh highest soybean production on record. Looking at how the soybean production forecast compares with expectations, doesn't look to be much of a surprise here today. Moving on to cotton, harvest progress there, 57% complete. As of November the 5th, 55% is the average, 61% last year, so pretty much right in line with what we would normally see. Again, no change to the acreage for cotton this month. Obviously, planted area down significantly, but rebounding from the big abandonment issues last year. So overall, actually an increase in harvested area this year. Fairly small change to yield this month. You can see actually up 2.1% or 16 pounds per acre from last month. Still down sharply from last year, but with a high abandonment last year, very high yield. But you'll see the sharp drop in the next chart coming up. Overall, it puts us at 13.1 million bales, up from last month and 9.5% below what was produced last year. As promised, here you can see that sharp drop in yield, but again, falling off partly from a very high yield last year, but also some struggles this year as well. In fact, that does represent the lowest all cotton yield since 2015. Looking at the yields here state by state and how they compare with last month, you can see Texas, of course, our leading producing state, down 5%, but mostly increasing yields across the rest of the growing area. Obviously, New Mexico and Mississippi showing declines, but outside of that, up or no change month over month. You do see 1 pound sign on this map. We are expecting record high cotton yields in Tennessee this season. Again, a little bit different story when we talk about yields compared with last year. Again, Texas down sharply, largely due to the record high yields in Texas last year. When you abandon 2/3 of your acres, you end up with a really high yield. So obviously this year coming off sharply from that. Looking at the overall US production, you can see again the decline this year. Like yield, this is the lowest since 2015. So how does that compare with the published expectations? Right up at the top end of those expectations this month. And kind of like we saw with corn, it looks like most folks were kind of thinking very similar to last month, but we did see that slight bump in yield this month. A few other crops I'll run through fairly quickly here. Peanuts, no change to the acreage there. Yield, though, we are down 4.2% from last month, now 6.7% from last year, putting our new production forecast at 5.98 million pounds. Both the US and Georgia looking at 6th highest production on record. Potatoes, you can see slight adjustment to the acreage there. This is our first in-season opportunity to adjust the acres. Fairly minor changes there. It is our first yield forecast of the season for the potatoes. You can see 452 hundredweight per acre. That's up 3.2% from last year. So with increases in yield and acreage year over year, we're looking at an 8.9% increase in production this season. Moving on to rice, no change to the acres from last month, but up very sharply from last year's with improvements in the water situation there. Very minor adjustment to the rice yield. You can see from last month down just slightly. So we're still up from last year. Production, again, minor change from last month, but big increase due to the increased acres this season. Moving on to sorghum, similar story there with no change to acreage month over month, but big increase year over year. Yield down 10.5% month over month as we get through harvest. For that crop, just not quite as good as folks were expecting, but still much better than the low yields that we saw due to the drought last year. Sugar beets, no adjustment to the acreage this month. Yield adjusted up 1.9% month over month. So we're now up 10.8% year over year. Overall production there, 35.5 million tons, 2.2% above last month and 9% better than last season. And then the last crop I have to talk about would be the sugarcane. A little bit of an adjustment down on the harvested area there. So overall, we're down nearly 1% year over year on the acres, but we more than made up for that slight downward adjustment in acreage with an increase in yield. So production there, you can see up 0.4% from last month, now down only 5.3% year over year. The next slide just highlighting some of the upcoming reports over the next month. You can see cattle on feed, cotton ginnings, farm labor, and ag prices all coming up later this month. 1st of December, of course, we'll have our normal monthly care reports there. And then, of course, on December 8th, we'll be back here for the next crop production report, talking about cotton, citrus, pecans, and a few other items as well. And then last but not least, as Joe mentioned at the beginning of the presentation, shortly after this afternoon, I'll be out on X for our monthly stat chat series, fielding any questions that folks might have about today's report. So that's the last slide I have for you. I'm going to turn things over to Mark and let him wrap it up for us here today. So Mark, podium is yours.
All right. Thank you, Lance. All right. Good afternoon. So let's walk through the balance sheets in the WASDE this month. Just a couple of things here that were a couple of the items that we're going to be focusing on today. Of course, we'll be incorporating all of the information we got from NASS this morning into the domestic balance sheets. And then a few other items of interest here. We'll take a little bit of a focus on Indonesia, rice production there, the weather situation in Argentina. And then also maybe for the first time ever in one of these three things, we're going to focus on Afghanistan a little bit as well, cotton production there. So let's start out with global wheat production. Down a bit this month, reduced 1.4 million tons. Various offsetting adjustments there. I'm going to talk a little bit more about Argentina in the next few slides, but we did reduce Argentina mainly on drought conditions there. And then the rest of the adjustments largely reporting based on recent government data. EU production up a bit, some offsets there, higher production in Lithuania, more than offsetting lower production in France. Russia production raised quite a bit, 5 million tons. That's based on AgMin data. That's an area adjustment, area and yield, I should say, and mostly winter wheat. About 4 million of that is an increase in winter wheat production. Kazakhstan down 1 million tons this month, and they had an interesting season. Started out too dry, and then became too wet at harvest. So just not a good year for them. Reduced that production forecast by 1 million tons. India, final government estimate there, lowering wheat production almost 3 million tons, but that's still a record for them. So let's talk a little bit about wheat production in Argentina. Just a review here of the main production regions in the country.
And also just to note, barley as well produced in Argentina, similar weather conditions. So I'm gonna focus on wheat, but just note that we're also looking at barley production and some of the implications for the recent weather patterns there. And so focusing first on what we call the Bolsa main part, the northern part of the production region in Argentina. As you can see here, got off to a very dry start. We did get a lot of rain recently, but bottom line, it just came too late. Harvest is beginning up there in the northern production regions. So this recent rain hasn't been real helpful in that area. Now, when we go further south, it's still been dry, but the rains have been coming a little bit more timely. And it is, you know, when we look at the VHI for over this entire region, you can see these northern areas, the Bolsa main area, still, you know, pretty poor in terms of the quality of vegetation, but looks a little better when you go south into Buenos Aires. And you know, as you know, I mean, harvest progresses from the north down to the south, so there's still time for production to improve down here. And as you saw in the previous chart, it's this area, Buenos Aires area, where most of the barley is produced as well. So wheat production, we lowered it 1.5 million tons this month. It's currently estimated at 15 million. You know, so, but as you can see, so relatively low historically, but up quite a bit from last year. Still better than last year. Just for some perspective, barley production, we also reduced by 6% this month, but it'll be up about 11% year over year. Global wheat balance sheet, beginning stocks up a bit. As you can see there, that is mainly reflecting lower exports out of Australia and Argentina from the back year crop. Production we talked about down a bit this month, 1.4 million tons. Feed use up largely in Russia, reflecting the larger crop in Russia, larger production there. Trade, main factors driving that. Down in Argentina, reflecting the larger crop, lower exports out of Argentina, but we raised our Ukraine exports and also reduced our India exports. So it all nets out to about 1.2 million ton reduction in global exports. Ukraine exports, we raised by 1 million tons this month to 12 million, still down considerably from last year, down about 5 million tons from last year's total. Ending stocks up a bit, mainly higher in Russia there too, reflecting the higher production there, lower in India. US balance sheet, not much going on there. Obviously, we didn't get any new production information, but we did make some adjustments on trade and domestic use. Imports up, that largely reflects imports from the EU, HRW coming in, and also some spring wheat from Canada, offset to some degree by lower durum imports from Canada. Domestic use reduced 4 million bushels, and that reflects information from the NAS flour milling report recently came out. Season average market price reduced to a dime, 10 cents a bushel, and just reflecting current observed prices and relatively low futures prices as well. Global rice production down just a bit. Some offsets here, and we're going to talk about Indonesia in the next few slides. Other one to note, Brazil rice production up. That is in an area adjustment, price driven. Good prices, encouraging and area increase there. Indonesia, on the other hand, we're going to talk about that. That's kind of El Nino driven at this point, weather related. And let's go into a little bit more detail on Indonesia. These are the main, kind of the regions of of Indonesia, where rice is primarily produced across most of the country, but we're going to focus particularly on the island of Java, where about 50% of production occurs. And bottom line is it's been pretty dry. So this is just a chart of the soil moisture in these main rice production areas. And really what's driving that is just the fact that we're off to a really slow or late start of the rainy season. You can see from this rainfall trace, the typical progression of rain increases starting, late August into fall. It's just not happening so far. Put up 2019 as a kind of an analog reference, a similar slow start, but eventually those rains did come. At this point, just too soon to tell. We expect that the rainy season will arrive, but it's just being delayed, and that's affecting area, particularly for the non-irrigated crop. So we've reduced area in Argentina by a relatively small amount, down I think 6% in production, if I recall. So global rice balance sheet, beginning stocks up a bit. That is actually the whole balance sheet for the most part is an India story. Beginning stocks up, reflecting higher stocks in India, lower consumption and lower exports from last year, implying higher carrying stocks this year. Production down, we already talked about that, global production. Total use raised this month, 1.6 million tons, and that is largely also India, reflecting the extension of their food aid program. So higher production, higher consumption in India, and trade up a bit. That's some exports out of Brazil, larger crop there, and ending stocks just about unchanged this month, but still at a 6-year low globally, down year over year, as you can see. Domestic rice balance sheet, relatively simple this month, just incorporating this new data from NAS. Small reduction in production, just coming straight out of ending stocks. Increased season average price, 50 cents per hundredweight, and that reflects higher prices for both long grain and southern medium grain. Observed prices, of course. Moving into corn, global corn production. Global corn production up this month, dominated by the increase in the United States, higher production out of the US, which obviously we'll talk a little bit more about in the upcoming slide. For the other countries, foreign countries, Mexico production down about 900,000 tons. That's an area adjustment. This is government data, incorporating Mexican government data. And, they've had some weather problems there, drought, hurricane came through. So that is likely reflected in that lower area estimate there. EU up a bit, harvest results data. And then FSU, Ukraine and Russia, also official government data showing a little bit better than previously expected crops there as well. Global corn supply and use, production up again, dominated by the increase in the US, increasing total supplies. Feed use also, mainly driven by higher feed use in the US, along with higher feed use in several other countries, including Canada, EU, Egypt, Mexico. But that is mainly all feed that's being imported. So that's higher imports leading to higher feed use there. On the other hand, some reductions in feed use in Turkey and Iran. Trade, global trade up about 3.4 million tons this month, driven by higher exports out of the US, Russia, and Ukraine, along with Turkey. Ukraine exports, we raised 500,000 tons, currently at 20 million. Ending stocks up a bit, and that is mainly in the US, Ukraine, and Paraguay. So the US balance sheet, incorporating the higher yield forecast we got this morning from NAS, implying about 170 million bushels more production than we had last month. Essentially spread across all of the use categories. Higher production equals higher use. Ethanol up, reflecting good margins there too. Also encouraging production. Exports up on higher supplies and relatively lower prices, and ending stocks up by about 45 million bushels. And so up from last month, and still the highest since 2018, 2019 crop year. Season average market price, we lowered 10 cents a bushel, just reflecting recent price weakness and the fact that we were carrying in a little bit higher stocks now as well. Global soybean production. Put up the back year here just to note that we raised Brazil soybean production by 2 million tons, and that just reflects the fact that higher than expected use in Brazil implies that the crop was bigger than we had expected. So I had to make that adjustment. For the new crop year, again, the change dominated by the increase in the US, but there's actually a fair amount of other relatively minor offsetting changes here in countries that aren't specifically listed, which I'll just run through real quickly, including higher soybean production in both Ukraine and Russia, and lower soybean production in South Africa as the farmers there switched to sunflowers, a little bit more drought tolerant in anticipation of El Nino. Global soybean balance sheet, again, looking at the back year, talked about that increase in production, the 2 million increase in production, that's Brazil. Beginning stocks for the back year and for the current year down, and that mainly reflects a revision in official China data for their imports. So they imported less, but they're crushing more there. So that's implying their stocks are down. So beginning stocks, that goes back 2 years. So the 2022, 2023 year and the year prior to that. So those revisions were incorporated, driving those lower beginning stocks for the back year. And then they'll also carry through into the current year. And crush increase for the back year, that is also an adjustment for China, higher crush in China. And then the tightening ending stocks for the back year, again, lower stocks in China, a little bit higher in Brazil. Now for the current year, 2023, 2024, again, beginning stocks reflecting last year's ending stocks. Production we talked about, crush up 1 million tons, that's China again, higher crush in China, and ending stocks down, again, lower ending stocks in China, and partially offset by higher stocks in Brazil. So the US, again, relatively simple adjustments here, incorporating the information we got from NAS this morning, 25 million bushel increase in production. Just really goes straight into ending stocks, small adjustment for rounding errors for seed and residual, but basically falls right into ending stocks. No change in our market price this month. All right, so let's talk about cotton. Here again, change in the US production, which we'll talk about. Foreign production up 600,000 bales. You can see from this list that the only one we have listed there is Argentina, accounting for about 200,000 bales. So there's at least 400,000 more bales there from countries that aren't listed. One of those is Afghanistan, which we'll talk about shortly, and also Paraguay increased production there. Argentina production, that is just an adjustment to area based on MinAg data from Argentina, and of course, planting is underway there now. So So let's talk a little bit about Afghanistan. This historically, these are the regions of the country where cotton, tends to be produced, historically was produced and continues to this day. But the driving factor in the forecast this month is the fact that the Taliban has banned the production of poppy production in Afghanistan. And evidently that restriction was effective because poppy production declined by about 95%. So farmers are searching for other crops. We can look at satellite data and confirm that in fact, poppy production is virtually absent across most of the country. But other crops are being produced, including wheat and cotton. And much of the cotton is produced in this area where poppy production was particularly high before. So what this means, and again, this is data from Afghanistan. It's hard to, there's a lot of piecing together anecdotal information where we can find it. But based on the best information we could gather, we're looking at potentially an increase in cotton production this year for Afghanistan of production of about 500,000 bales, 500,000 bales. Huge compared to their recent history. And whether this continues, well, we don't know. It depends how long this restriction on poppy production lasts, presumably. So kind of an interesting story to watch going forward there. Global cotton balance sheet, beginning stocks up a bit this month, 200,000 bales. That is mainly reflecting recent data from India, higher production in India, incorporating into the new balance sheet. And production we talked about. And consumption, we pulled back consumption 500,000 bales, mainly reflecting the fact that we haven't been seeing that increase in consumption that we've been anticipating. So pulling back consumption across various small, not China just yet, but various other relatively small importers, including Vietnam, or small consumers, including Vietnam, Turkey, and other small users. But starting to pull back that consumption forecast. And then so with higher production, lower consumption, ending stocks are up, and mainly that's higher stocks in the US and China, which combined account for about half of that increase in the ending stocks forecast. And as you can see there, China ending stocks up about 500,000 bales. We assume that that's mainly being purchased for their state reserves. U.S. cotton balance sheet. So again, incorporating the information we got from NASS this morning, higher production. Higher production at the same time, also incorporating the latest data on mill use, suggesting U.S. mill use has been, a little bit more sluggish than we had been expecting. So higher production, lower domestic use, no change on exports so far. So, all of that increased production combined with lower domestic use is primarily going into ending stocks. And again, exports we kept unchanged. Overall, exports have been relatively sluggish aside from some recent pretty good purchases from China or sales to China, but otherwise fairly disappointing. So we'll continue to watch that. Season average market price, we reduced 3 cents a pound, just reflecting, well, where prices have been recently. And with these higher supplies and higher ending stocks, that's going to put some pressure on as well. All right, sugar. Got to catch my breath here. There's always a lot going on in sugar, and this month is no exception. So starting with the back year, last year, 2022 sugar year, kind of finalizing a lot of this data based on SMD data and other sources. But that increase in production for the back year mainly reflects, final SMD reporting and also some production that occurred this September that is shifting back into the back year. So again, that marketing year shift that often occurs. TRQ imports raised 29,000 short tons this month. That reflects just, again, sort of going back through the data, complete accounting, a shipment from Peru that previously wasn't properly reported by the census. So getting caught up on that. So that increases that TRQ import estimate. And then total use up. Ending stocks, you know, in this case, total use is kind of the residual ending stocks data from SMD, and then total use kind of raised to make everything balance in the kind of a residual miscellaneous category. So carrying into new year, a little bit tighter beginning stocks, 102,000 ton reduction from last month. Beet and cane production up. Of course, the cane production increase reflects NASS data along with well, for both crops, adjustments we made to the recovery rate. And for beets in particular, we're also start trying to forecast what will be produced next September from next year's crop that will fall into this year. Again, that shift in the marketing year. So all of those issues combined raise our production estimate by about 260,000 tons. TRQ imports down 161,000 tons. That reflects, so that's going to be a shortfall in the TRQ. And that reflects the fact that we're not going to get any imports from Philippines. And they have made that known. So that's where that shortfall is coming from. Another thing to note this month, we made a fairly large increase in our high tier import estimate. And as you know, I mean, historically, we used to treat this high tier forecast. We sort of adjusted upward as sugar was coming in high tier. We just decided that we're going to start to reflect more of the recent reality. The market is pulling that sugar in. Someone is making a profit, bringing it in. And so we're now starting to forecast a little bit higher, high tier. And, you know, just to note again, last year we started our high tier forecast at 50, came up, you know, 10 times higher than that in the end. So, so we're adjusting our kind of thinking on the high tier category there. And then when you run through the whole balance sheet, ending stocks nearly unchanged this month. Mexico balance sheet also important, as you know, didn't make any changes to the back year, kind of got that right. We feel last month, but for the new crop, reduced production, 240,000 metric tons. And again, as you know, and this is a story we've been telling for the past couple of months, it's been dry, drought conditions there. So our own internal weather analyses, along with information from the Post, suggests that crop is smaller than we had been thinking it is. So we've made that adjustment accordingly. Now, worth pointing out that a lot of that drought is not necessarily affecting the states that produce the low pole sugar that comes to the US. So therefore, we didn't reduce exports, you know, nearly as much as reduced production. So we still expect imports into the US from Mexico. Not, they won't completely fill the US needs, but that sugar is still going to come in. And then on the other hand, Mexico will import sugar to fill their own needs. So again, kind of a lot going on here, but the key point is production is down, but production of low pole sugar to supply the US market should still remain relatively available. All right, let's go into meat and dairy. Meat production, beef production this month down, mainly looking at slaughter pace, recent slaughter pace. So higher, increased cow slaughter, more than offset by lower steer and heifer slaughter. That's for 2023. 2024 production, beef production up, reflecting a few things, higher placements and higher cow and bull slaughter. So again, as we continue to put cattle in feedlots that moving into next year. Pork production down a bit this year and next year as well, mainly reflecting lower weights, lower slaughter weights there. Broilers and turkey production down 2023 and 2024. So the 2023 reduction, again, observed data, hatchery data, slaughter pace, all suggesting production down this year. And for turkeys in particular, prices particularly low. So the production expected to be down this year and carry into next year. Broilers as well, kind of expect relatively low current prices to reduce production next year as well. Steer prices, no change for 2023, down a bit for 2024, mainly reflecting lower prices in the first half, not quite offset by higher prices in the second half. Hog prices reduced 75 cents per hundredweight. Again, reflecting current prices for 2023. In 2024, mainly looking at just, been some persistent weak demand. Most of this decline in our price forecast for 2024 is in the first half of next year. Broiler and turkey prices, again, 2023 observed prices relatively weak. Broiler prices, we adjusted higher this month, 1.8 cents per pound, reflecting that our lower production forecast to support that. Turkey prices still expected to continue to decline, just weak demand, especially in the first quarter. U.S. meat trade, a couple things to note here for 2023. Obviously, we're just really mainly looking at recent observed trade data. You see the big reduction in broiler, relatively big reduction in broiler exports for this year. Again, that's observed, and that's mainly lower exports to Cuba. And so, those are hard to predict. They can go up and down, driven by a lot of factors. But for now, that's kind of driving that reduction for 2023. Into 2024, a couple things we anticipate weaker demand, higher U.S. prices across the, no specific country really driving that that trade export reduction, kind of across the board. Turkey exports up a bit for 2023, just based on observed data, down for next year, lower production, tightening things up. Beef imports raised again. That's mainly Australia imports, continued strong demand for hamburger meat in the U.S. and relatively high U.S. prices, of course. All right, so dairy. Dairy production. So this incorporates the most recent milk production report from NAS, and it's showing for 2023 lower cow numbers and lower milk per cow. We expect that to carry through into 2024. So production this month lowered for both years, 2023 and 2024. In terms of exports and imports, not much happening on fat-based imports for this year. Next year, 2024, raised fat-based imports up a bit, mainly based on butter. Increased imports of butter. U.S. butter prices have been very high, as you know, and we'll talk a little bit more about that on the next slide. Exports, on the other hand, down this year. That's also lower butter exports, high U.S. butter prices, and for 2024 as well, that reduction fat basis exports is mainly reflecting lower butter exports. Skim solids exports up for this year. That's mainly higher milk protein exports, and for next year we adjusted it higher. Higher lactose exports. And finally, with U.S. dairy prices, for 2023, relatively small changes. Pulled back our butter price forecast, and basically those prices which shot up a lot higher and faster than expected. Well, now in the past couple of weeks, they came down a little bit faster than expected as well. So that's reflected in that lower butter price for 2023. Going into 2024, we expect to continue to see a little bit of pressure on the prices relative to where we were last month, just reflecting weaker demand. Cheese price for 2024 up a bit, reflecting those tighter milk supplies, and that's also reflected in the higher prices for the other products, non-fat dry milk and dry whey. Class prices 2023, class 3 price up a bit. That's reflected in that higher dry whey price. Class 4 price down a bit. That's the lower butter price. All milk price unchanged for 2023, and for 2024, class 3 price is raised. That's higher cheese and whey, and class 4 offsetting lower butter prices, higher powder prices, raising the class 4 price slightly, and the all milk price by 25 cents per hundredweight. And that covers all of the high points of the WASDE report. So thank you all for attending and for listening in. For all the folks online, thank you as well for listening in. Hope I was able to answer some of your questions or give a little bit of a perspective behind how we came up with these numbers, and I'll look forward to seeing you back here next month.